fine. So we are going to write the outline of the oil and gas syllabus, right? So oil, gas. The name of the paper is oil, gas, and other minerals taxation. Okay. So that's the name of the paper. Oil, gas, and other minerals what? Taxation. That's the name of the paper. So the most dominating one is the oil and gas. But it has made a lot of students weak when it comes to the minerals. True or false?
True.
True.
Oil and gas, oil and gas. I'm not taxation. Confirm focus it. Oh, oil and gas. But
Minerals, me say there.
minerals, this is the kita about 40 marks. So oil and gas is 60, minerals is 40. Check the trend. Every diet. Oil and gas is 60, minerals is 40. So you see how the thing is. Okay, anyway. So we are going to write some few things down and then we go through. So the first area which you have to know is the nature of natural resources. Okay, now the nature of natural resources is, let's just know the different kinds of natural resource endowments we have, right? So you know we have different kinds of natural resources. You just have to know them: oil, minerals, all that, timber, fisheries, the ones in the sea, above the sea. Then the next thing you have to know, they are going to ask you. Sometimes this question comes: the ownership of natural resources. He's calling me on WhatsApp by this time. Oh, excuse me. Hold on. All right. Sorry. I'm a solo ne frame. So ownership of, please, I hope you cannot hear me. I hope you cannot hear me.
Yes, sir.
So the whole thing is that the resources we have in Ghana here are actually owned by us, but they are put into the hands of the president to manage it for us. Okay. So that part alone, they sometimes ask it for 5 marks. Then once you know that, there's the resource life cycle. Okay. So when it comes to exploitation of resources, it has a life cycle. And this thing, almost every diet, they ask you a question of it, right? So exploitation of natural resources. So resources have what? A life cycle. Are we following? So anytime somebody wants to exploit natural resources in a country, it has a particular life cycle, right? Oh, why is IDM behaving this way? Oh, there's a bug that I need to fix. Okay, so exploitation of resources. Okay. Now, all resources start with some sort of what? Exploration, right? Where you sort of explore. Are you getting all the search? Okay, so after exploration, what you do is that you do appraisal, okay? Appraisal or evaluation. Okay, so you have appraisal or evaluation, then you mostly have development, Okay. We have development. That's setting up of machines. So here, let's say if you are searching for gold, usually we call this reconnaissance, right? Explorational reconnaissance. Then appraisal, that is where you check whether there's gold where you want to go, right? You appraise to see if it's oil, whether they are effective crude oil or hydrocarbons. Then development, you set machines to drill, right? After development, you now do extraction. So you can call it extraction or production, right? So after extraction or production, then some people after producing, it doesn't end there. They must give some of the land back to the government, right? We call that relinquishment. And then finally to the abandonment of fields. Okay, so the fields will now be abandoned because you are done. Usually, all natural resources go through this cycle. Even timber, you go and search for the effective place where you can get good timber. You check whether that place, if you cut the timber, you can reforest it, like you can grow it back. You start setting up the machines, the chainsaw, and the things to cut. You start cutting them. You export and transport them. You give part of the land to government to regrow the trees. Then you finally abandon. So it's literally similar, right? Yeah. So the exploitation and the life cycle, very important. Then you come and look at, are we all follow? Are you writing? Are you writing?
Yeah. Yes, Prof.
You have to do is look at crude oil and the pricing of crude oil. So this diet, I'm really suspecting it's possible. They may ask you pricing of crude oil. So you must know about oil. You must know how it is priced, right? So oil actually, when it comes to oil, okay, crude oil has some factors, right? We have very light oils, we have middle distillates, we have heavy oils, and oils are heavy or they are heavy based on something we call the API gravity, right? And oils are sweet or sour. In simple terms, they are very poisonous or they are less poisonous depending on the level of sulfur inside. Okay. And this kind of oils, are you getting it? End up bringing some particular oils which we call Brent crude. Okay. And these Brent crude are like the benchmarks that we use to determine the price of other oils. So every oil that you see on the market will either be based on three types of Brent. I said Brent crude, benchmark crude, right? Brent crude is an example of benchmark crude. So let me call it benchmark crude because we use them as benchmark, right? So I hope you are getting what I'm saying.
Yes.
Yeah.
Benchmark crude, there are three main that we use them. Okay. The common one we have is the Western Texas Intermediate. Now, this Western Texas Intermediate is from America, right? It's from America. And this is what they usually call gasoline, right? WTI. Okay, this one is from America. Very sweet oil. Then we have what we call the Brent crude that I was talking about, okay, which is the common one, the Brent crude or the Brent blend. Okay. Now, this Brent blend is from the North Sea, Norway, Iceland, those areas, right? And this is also common. Then here we mostly use what we call the OPEC basket oil. So this oil from a combination of countries, right? The OPEC countries. Now, these three oils that you see here, right? We use them as like the basic, right? Plus or minus a differential. Are you guys getting it? Are you guys getting it? So if like this Brent benchmark crude is like $60 per barrel, okay, we are going to do plus or minus based on this differential. And this differential mostly depends on the API gravity, the sulfur level, right? So you are saying that, okay, based on this thing, that oil that I'm doing will make me adjust to this 60 or below the 60. So if there's more sulfur, for instance, and more sulfur means that the price should go up, then I'll add, meaning that the oil I'm selling is more toxic or more heavy, so it should be priced higher. Do you get it? Then if the sulfur content may be low, then that differential may be lower, so it will be a minus. So maybe oil A, okay, oil A will be $60 plus maybe 0.24, right? Do you understand? Or maybe $24 based on that differential. And oil B might be the same $60,000, which is like the benchmark, minus maybe the same $24, right? So you can all agree that oil A will be more expensive than oil B. True or false? True or false?
True.
Are you all getting it? So all these differential and all those things, demand and supply also plays a key role. Okay, demand and supply also plays a what? A key role. The more people demand the oil, the more expensive it should be. Or please, it seems the number on the call are increasing. How?
Bill,
Yes, please.
that's the number. Check your
Okay.
inbox.
Is that the exact number? Can I log the call?
Yeah, yeah, lock it.
Okay, anyway, let's continue. All right. So demand and supply can also play a key role in pricing of oil. Then we have speculation. Speculation can also play a role. So there are some things that you should know when it comes to pricing of crude oil, right? It's been a while, but I told you just prepare. So that was the pricing. Now, the next area you have to look at is the different types of petroleum operations, right? So petroleum operations, we have three types of petroleum operations in Ghana, right? If you go to other places, they don't do it like we do here. We use upstream, midstream, downstream. When you go to other countries, they use onshore, offshore. Even in Ghana, most of the onshore activities are all upstream, right? Yes, but other countries they don't do midstream, downstream, upstream. They just do onshore, offshore, right? But they can still ask you. Okay, so once you know about this, the next area you have to know about is you have to now know the legal framework. And now CIT likes the legal framework a lot. Before, if we go back to 20, let's say 2020 and below, like 2020, 2019, thereabout, the legal framework was not so much important. They really examined most of the fiscal regime rather, right, rather than the legal framework. But now the various laws, now very important. If you check every date, they have questions for the legal framework. Then we come to the fiscal regime of oil and gas. This fiscal regime, take it very serious. So fiscal regime comes with something we call the fiscal elements. Okay, so the fiscal element is simply the ways government and contractors make and share money, okay, through royalties, additional oil entitlements, surface rentals, bonuses, all those things. Yes. So the fiscal regime, very important. Before, if you look at the old past questions, you will see that there are two fiscal regimes. Then over time, it became three, then four, then now there are so many fiscal regimes now. When CIT updates their syllabus, you see now there are 8 fiscal regimes. Okay, but for your exam, let's just stick with 4. Production sharing contracts, concessionary system, or what we call the licensing regime, or what we call royalty tax system. Then we have the service contract system. Then we have the hybrid system. Actually, joint venture is a system, but let's not call your examiner will not call it joint venture. In Ghana, we use what we call state participation. Okay, so let's stick with that one. But things have evolved, and when you go international, they may mark you wrong. I always stick with what the examiner is looking for. Makes sense. Then, once you know the fiscal regime and the fiscal element, the next area is to learn how to distribute crude oil. Okay, so there comes the distribution of crude oil, and distribution of crude oil is just how to allocate the fiscal element. Once you know this, the next area, as part of the legal framework, we were actually supposed to look at petroleum agreements, but let me bring it here. So petroleum agreements, very important. Okay, so petroleum agreement, you have to know them. Then the next area is to understand unitization. Okay, unitization agreement. Okay, which comes to unitization redetermination. You have to know VI, X, XI. Okay. The next area is to look at stability agreement, especially this diet. This diet, I'm sure you get stability agreement. So look at stability agreement. Stability clauses. You can have what we call freezing clauses, and you can have what we call equilibrium clauses. Right. So we'll come and talk about them. I hope you are writing.
Yes, sir.
Yes, sir.
So this area has a chunk of your marks, okay? This is where like majority of your marks fall. Then we now come to what? Okay, so let me just leave the other ones. Then we come to principles of taxation, right? So principles of taxation for petroleum. You realize that all through this area, why is my PC feeling like this? So just like I broke audit into 5 questions, after this, I'll break it into 5 questions. I'm coming. Why is this thing behaving like that? Wow. Apart from this freezing. Oil and gas doesn't want to be lent to Yambo.
Obuakra.
Oil and gas say no, I don't want to be lent.
Obuakra.
Hey, all I can say, I say, eternity, no.
Oil and gas doesn't want to be lent to. I see you enjoying the life, man. Anyway, so let me just start afresh. Don't know why my notebook is wasting time. Because the notebook, whatever I write, I can share it as a PDF, but you enjoying the life, man. So I'll rewrite. So first, let's look at the overview. So as I told you, I'll break it into 5 areas. So overview of oil and gas. So overview and oil and gas and minerals taxation. So first, I said look at natural resources, right? No, be so. So natural resources. Then the ownership of natural resources. Ownership of natural resources. Let's call it NR. Then come and look at what? The life cycle. You remember the life cycle of natural resources. That's the exploitation. Not so. Then come and look at crude oil and pricing of crude oil. Then petroleum operations. Sorry. Petroleum operations. Yeah. And the next area is the legal and fiscal regime, right? So question 2, the legal and fiscal regime. So with the legal and fiscal regime, what do we have to know? The legal framework. Okay. So the legal framework, there's a lot under the legal framework, right? And I'll use questions to take us through these things so that it won't be boring reading, explaining. Where we have to visit the book, we'll visit the book. So legal framework, then we'll come and look at the fiscal regime. Yeah. This thing behaving like this. The fiscal regime. Then we look at fiscal elements. Fiscal elements. Look at the fiscal regime of Ghana. Fiscal regime of Ghana. Okay. Petroleum agreements. Petroleum agreements. So fiscal element and distribution of crude oil, right? Crude oil. And then here, this is the biggest area actually, right? Petroleum agreement, stability agreement, unitization agreement. See here is very broad. If I want to break it into 5 questions, so unitization and redetermination. Redetermination. Then we have stability, unitization. Yes, we have the Petroleum Revenue Management Act. Okay. Then finally, we have key players in the petroleum industry, rules and obligations. Rules and obligations. This thing, very important. What's the role of the Bank of Ghana? What's the role of the Auditor General? All those things. You need to know them. If you don't know, most times it doesn't come, but it can take you by surprise. I remember that when this thing comes and people could not even do it. People wait. At the time we are already midway through the class, that's when they'll be chatting you. Which one is this one? Oh, please, I'm coming there. Oh, wait. So after key players, there's another area, but that one the CIT will never ask you. So let's just leave it. I won't even mention it. Then question 3. We look at principles of petroleum, principles of taxation, right? And principles of taxation for petroleum. So understanding principles of tax means you must first understand accounting, right? So the accounting methods is what will start this one, right? So the accounting methods. So
Bill,
yes, please.
you didn't in the previous page. You mentioned the the stability clauses and the equilibrium
It's
clauses.
completely agree.
Okay, okay, it's back. Okay,
I told you it's a framework.
thank you.
All right. Are we okay? Okay. So the accounting methods, so successful effort and then what? Full cost accounting, right? Then you also need to know DDA, depletion, depreciation, and what?
Amortization.
Amortization. You must know what they mean, how they are applied, and all that, right? So this one can come for a full question. Then you have principles of taxation, right? That's petroleum income tax, principles of taxation, right? So you must know principles of tax. Okay, that goes under section 63. Purposefully, they are going to ask you about ring fencing, right? So ring fencing, almost every diet, you must know about ring fencing. All right, that's where it starts. Then ring fencing includes separate petroleum operations. So ring fencing, then separate petroleum operations. So let's call it PETOP, section 64. Then we come to the most important part, which is exploration and development operations. All right, so exploration and development operations. All right. So exploration and development operations section 65. So all these areas actually go together. This is where capital allowances fall because you need to pull everything into a single pool before you can transfer them. Makes sense. So these areas, when it comes to theory part, these are the areas. I'm not going to list everything, but the areas that require attention, yes, those are the ones. Now you'll be getting questions mostly around the filing of returns. Yes, they are going to ask you a question. Decommissioning fund. Yes, they are going to be asking you a question. Decommissioning funds. Direct and indirect assignment of interest. Direct and indirect assignment. Remember that when it comes to petroleum and mining, right? Their tax rules are almost the same. almost, just slight differences. So whatever you can apply for petroleum, unless specifically stated, it can be applied to mining as well. So if you know one, you can do the other one. Okay, so you have direct and indirect assignment of interest. Then you have usually disposal of petroleum rights, but just let me just put income and expenses under petroleum. We are going to actually look at all that income and expenses under petroleum. Then finally, we come and look at relevant financial cost. Okay. Relevant financial cost. So literally under principles of taxation petroleum, this is also a big area, but it's not big like the question 2, like the one we saw, right? So this is a big area. Then the fourth area is minerals and minerals taxation, right? Minerals taxation is also a big area. Now, when it comes to minerals taxation, everything you see here is still there. But then you must understand the fiscal regime of minerals. Okay. The same way petroleum had a fiscal regime, minerals also has a fiscal regime, right? So, like the fiscal regime, you should know how minerals work in Ghana. I getting it. The various licenses, in Ghana, what are the kind of licenses you can have under minerals? Yes, start mentioning them.
Recognizance,
Reconnaissance
and
license,
prospecting, and then
prospecting
mining.
license, and mining lease.
Are you sure it's only mining lease? There are more. Mention the rest. Small scale, small scale mineral license. Okay, it's also there. We have service support license. That means I'm more exam now. You could be some small scale on the service support. I'm ready to
The argument if I want to write,
Okay. Please, are you there? Right, and then let's go. Where is this guy? Where is this guy? Where is this guy? Please write. Oh, this is a framework. Oh. If you write, there's no way you fail. Me, you see, always I use frameworks. I don't just teach you random things. No. If it's in the framework, it's coming. You get the idea?
yes, sir.
Okay, so once you understand this, there's a bit of other things you have to look at, but the chance that it will appear is possible, not probable. So I'll not even mention them. Then you come to principles of taxation. And when it comes to principles of tax for minerals, okay, what you should be mostly expecting is ring fencing, right? Ring fencing, that's looking at separate what? Mineral operations. Okay, so separate mineral operations. This is where you are going to talk about a mine is a separate mineral operation on its own. Okay. Two or more mines sharing a processing facility where you dig a hole, okay, or you start exploring under reconnaissance license and you start prospecting under the same license. That means it's the same operation. If you are doing prospecting and you later get a mining lease for a well you were digging, it's still the same operation. These are all separate mineral operations. That's what the law says. It's that easy. Okay, we'll dive into it. Don't worry. I'm just giving you a brief overview of like the whole thing so that you know oil and gas. There are other topics, but those ones, if they'll come, it to be 5 and 10 marks, right? These ones are heavy. It means that your chances of succeeding are here. Then once you know the same way, here instead of decommissioning fund, we have approved rehabilitation fund. Very important. That's abandonment of fields. I told you abandonment of fields is everywhere. Then we look at what we call relevant financial cost. I wrote it at the other side. It's still here. Okay. You have income and expenditure under mining. Income and expenses you have to know because mining usually you are going to compute taxes, right? Then withholding taxes very important. So withholding taxes under petroleum and minerals. Very important. In these areas, don't joke with them. Nowadays, they've seen that students are used to the normal trend. The thing has become too predictable, right? So now they'll be doing bluebird. How old are you? They'll be picking from these things and bringing them. It may be possible that you go tomorrow, you go and meet something 2 days later, right? I believe Thursday. You go and meet something new you haven't seen before. Don't be scared. It's just the same principles, but you are playing with your mind small. You get it? But make you no shiver. And God day you go be. Are we okay?
Yes, sir.
Good, good. So and then filing of returns. So the filing. Then there's one BOSU. There's one BOSU, which is what? Reconnaissance and prospecting operations, right? This is the same as that exploration and development that we saw, right? We put them into a single pool. Does that make sense? Does that make sense?
Yes, sir.
Yes.
Big Bad Wolf, which is on its own, but always it comes hidden somewhere. Mineral royalties. So you see, I put it in capital letters. Mineral royalties is the only topic on its own. Though it's part of minerals, it can come on its own from 5 to 15, where you just have to compute royalties and comment. Okay, so this is everything about minerals taxation you need to know. Okay, there are other minerals like gold deposits, diamonds, timber, fisheries. It can be anything, but the process is still the same. Then we come to question 5, and question 5 is miscellaneous areas. So when it comes to miscellaneous areas, what can they really examine? One is FPSO. So you should know FPSO. Business types, okay? So they can tell you what are the various business types that you can do under petroleum operations, joint ventures, companies. Are you getting it? And the rest, they'll get a partnership in way distinguish between a partnership and then what do we call it? A company. These are very simple questions. Then think capitalization, or let me just put here anti-avoidance provisions. So anti-avoidance provisions are also here because you know petroleum companies are one of their multinationals. They like to avoid taxes a lot. So you must know anti-avoidance provisions like transfer pricing, TP, not detailed transfer pricing like you do in international tax, but like the application of the arm's length standard. And then think capitalization. Usually, yes, that's where they go. Then you must know about leasing, okay, because petroleum companies and mining companies lease a lot. So leasing, you make reference to section 30, regulation 17 of the income tax regulation LI 2244. Okay, then there's one area, it's rare, but once a while they ask you questions on them, which is the allowable deductions, right? That we know from normal way, including things like residence. You see, everything you're doing in tax is actually examinable here, right? Residence, permanent establishment, you know, petroleum companies usually deal with these things. So these ones are all miscellaneous areas. It means anything can come there. So if you like check the trend, all the time there are miscellaneous areas, whether you like it or not. There will be a miscellaneous area. And it can even be a calculation. Last night, they brought the production sharing contract. You know, Ghana doesn't do production sharing contract, but they brought production sharing contract question. Meboa. Those who have seen the paper. You saw, right? You saw, right?
Yes, bro.
So it tells you it's miscellaneous. Though it's under fiscal regime, but it's an area that doesn't apply. So let me see if I have it. Sharing, production sharing contract. Production sharing contract. Please hold on. I'm checking if I have it. I think I had it too, but I don't know where. Uh, please hold on. I'm coming. Where did I put this question? Yes, it says no. Wow. I compiled it, but I don't know where I've put it though. Please, if somebody has last diet paper, the person should share with me. Eh? Let me see. If you have last diet paper, please share with me. Eh?
Oh, Prof, it's not with me here. It's hard copy. I'm also not in the house now.
Okay. If somebody has it, the
Yeah.
person forward it. I want to show you something. Please, I hope by now everybody has written. I hope you have all written. So we can start today.
Yeah.
Okay, good. So we start with natural resources and resource exploitation in Ghana. Okay, there's a question they will ask you to discuss the concept of resource blessing with resource scarce paradigm and its relevance in the context of petroleum, right? So when we talk about the resource blessing and resource scarce paradigm, this refers to the situation where we here have natural resource abundance, right? But this natural resource abundance, other people are exploiting it and we are not using it. That's the resource scarce. Resource blessing, we have so much resources. Are you getting it? But we haven't put together proper policies. We only end up with what? Corruption, economic volatility. Are you getting it? People benefiting, this white people benefiting from our resources, and we're not investing in proper human resources to take advantage of it. So, I mean, you know what is happening in the system, right? When they ask you these questions, feel free, go that extreme. Makes sense. I believe that is fine.
Yes, sir.
Good. So, what then is the resource scarce? They can ask you about the resource scarce. Now, the resource scarce refers to the failure of natural resource rich countries to benefit fully from their natural wealth, resulting in slower than expected economic growth, poor social economic welfare indicators, governance challenges, and factors that can lead to this is oil price volatility, which mostly disrupts our budgetary planning and investment, the Dutch disease, which means resource export inflates the local currency, making other sectors what? Less competitive. Okay. So these are this is what we call the resource scarce. Okay, so they can ask you a question on the resource scarce. It's mostly economic. When you see our syllabus, there's something called petroleum economics. And the deep economics that used to be there, they've taken it out. Now it's just theory, like what is the resource scarce? What are the challenges associated with the resource scarce? Some of the challenges are economic growth. Countries who rely on natural resource exports often experience slower economic growth compared with those with diverse economies, right? This is one of the problems with the resource scarce. Two, social welfare. Resource-rich countries frequently exhibit poorer social welfare indicators. True or false? True or false?
Prof, true.
So
No, true.
can you throw more light on it? How we experience social welfare problems?
The money that will come out from the generation, like what's the oil and gas is supposed to give us now. Some few people will just be mismanaging the resources, and
It doesn't.
the general public doesn't even get some of any benefits from it.
Okay, I'll take it. Okay, good. Then we have corruption and governance. This I don't need to talk about it, Anamebwa. Oh, we still need to talk about it. Okay, someone should read the points and let's go because the resource case they can ask you is part of what you need to know. So let's start from 3 because we know 1 and 2 already. The challenges.
Corruption and governance. The influx of resources revenues can lead to increased corruption and poor governance. The wealth from resources can create rent-seeking behavior, where individuals and groups vie for control over resources revenues rather than investing in productive economic activities. So 4, environmental impact. Resource extraction often results in significant environmental damage, including deforestation, pollution, and loss of biodiversity.
Oh, okay.
Right. The focus on exploiting resources can overshadow environmental concerns, leading to long-term ecological damage. Conflict. Resource wealth can exacerbate conflicts, both internal and external. The competition for control over valuable resources can lead to violence and instability, as seen in various conflict-ridden regions rich in mineral
Please,
and oil.
can throw more light on that point, the 5, the conflict. I need that point to be well explained. Yes? Who can throw more light on it so that we move?
Okay, so I think that's conflict in the sense that, let's say for instance, Ghana, I have a land. Once we've defined oil on it, they say the government says I don't have any rights over the land. In some regions, it brings fights because the land is for me. So why would you come and take it from me and not give me anything? And then you see them driving in big cars and all that, and you're not even getting anything. It brings conflict.
Any different? That's very good. That's one of the conflicts. But any different perspective on conflicts? Any different perspective? So the same question can come in different forms. Look at this. Is the resource scarce an African problem, or does it have global implications? Explain the criteria used to measure the resource scarce and discuss its inverse relationship with economic growth. Do you see? How different is it from the first one? The same, right? True or false? So in simple terms, what's the resource scarce? What is the resource scarce? Yes. What is resource scarce?
Having resources but not benefiting from it.
Okay. Having resources in abundance but not benefiting from them. Okay, that is good. So oil reserves, can they ask question on oil reserves? I doubt.
Prof, they do.
Eh,
They do. Explain the following: porous, drywall, rainfall, wall, development wall. They ask.
yes, that one I know they ask, but those ones are not reserves. Anyway, let's look at it. Discuss the class.
Please, I've shared the 2025 letter sittings question with you.
Okay, I think about a couple of you guys have shared it.
Okay.
Thank you. Now, discuss the classification of oil reserves and the level of certainty associated with each category. Okay, people hear reservoir, reserve. What does it really mean? Who can explain? What is a reservoir and what is a reserve? What's a reservoir and what's a reserve? Who can help me to distinguish between a reservoir and a reserve?
Okay, so I think the reserve is the producible part of the oil in a reservoir.
Good. That is it. So if this is the rock of hydrocarbons, right? You know, sometimes there are some rocks here, right? Which can, it's like when you put soap in water, the volume goes high. Maybe no be so. So you would think that, okay, this is the quantity that you find here, but maybe because of these rocks, it is shifting the quantity, should have been here. Then you see the oil hovering on top. Now, the gas, sorry. Now, what we say is that in this whole basin is the reservoir, right? But the amount of oil that can come to the top is what we call the reserve. Okay? The one that cannot come to the top because of these rocks is the non-producible oil. Makes sense? So the producible one, I get it, is what we call the reserve. So the sum of the producible and non-producible give you what? The reservoir. But we only know what comes to the top through what we call the recovery factor, how much we are going to what? Recover. Okay, and this is how much of producible oil over our total what? Reserve. Do you understand? Total reservoir. So your reserve over your reservoir is the recovery factor, telling you how much of the oil can come to the surface. Did you get it? Even those that can come to the surface, there can be a problem with them.
Prof.
Can you hear me? Oh, what is this? Can you hear me?
Akasegun from
Oh, I'm saying, hey, yes, I'm being correct. I don't know what I'm saying. I can recall. I'm saying this that if you go to the exam, right, and they ask you about reserves, the questions are normally not going to be strictly reserves. They'll mix it up, like write short notes, those kind of things. Do you get it? This is a summary of what I said. So when it comes to reserves, all your reserves are classified based on the level of certainty regarding their recoverability under existing technological. You know how much can come to the surface, right? But sometimes you can't get it as specified. Do you get it? So we can break them into proven reserves or unproven reserves, okay, which have further subdivisions based on the confidence level of recovery. You know this can come up to the top, but it depends on the probability. So we have what we call proven reserves. And proven reserves refer to oil quantities that have high degree of certainty. Are you following? Proven reserves have what? A high degree of what? Certainty of being recovered, being brought to the top. So under current economic conditions, legal frameworks, and available technology. So they are the most reliable and are typically used in financial reporting and planning and budgeting, because you know that these ones have at least 90% chance of coming to the top. Does it make sense? Does it make sense? So these proven reserves can be broken into proven developed reserves and proven undeveloped reserves. So it's like if I have my proven reserves here, I can have proven developed reserves, and I can have what? Proven what? Undeveloped reserves. Make sense? Make sense? So the reserves that are already accessible through the existing wells, infrastructure, and operational facilities is the proven developed reserves. Okay, this one you don't need an additional investment to extract them because they're already at the top. Do you get it? So oil already being extracted from active fields, the chance of recovery is very high than one which is already under some bedrock you have to go and extract. Does it make sense? Does it make sense? Does it make sense?
Yes.
Yes.
Then we have proven undeveloped reserves. This one, you know that it can come to the top, but you have to put in some extra work to bring it to the top. Look, I used this example the last time. Some people laughed at. One person is, cow feet, kotoje, right? You know that some people are chewing. There's the meat on the surface, right? And some that are hidden, but they are in close proximity, right? You can pull it with your teeth. Then there's one that is hidden far, which people like to find. Then they'll be doing, right? That one is the proven and developed reserves. You need to put in extra effort. Sometimes some people even go and take toothpick or spoon or fork to pull that meat from the marrow, right? I'm just using it as a hypothetical example, but it makes sense, right? So this one, yes, you know it can come out, but you have to put in some sort of investment, right? So a newly discovered field, or even a field that you're already working on, you realize that there are other quantities of oil somewhere that can come to the top. It means that you have to invest further to bring it to the top. Does it make sense? I hope it makes sense. So when it comes, that means you can have the knowledge of literally bringing this up. Make sense? So I hope we all understand what proven reserves are. And they can be broken into what? They can be broken into what? Oh,
Into two.
Developed.
proven developed and proven undeveloped, right? So the next type of reserves are unproven reserves. So unproven reserves are the ones that are less certain, okay, due to economic, technological, or geological factor. You know that this oil can come to the top, but you don't have the technology to bring it up to the top. So we have what we call probable unproven reserves and possible unproven reserves. Now, the probable ones are the ones that have 50% chance of being recovered based on geological and engineering analysis, right? Then we have the possible ones that have 10% probability of being recovered. You know that it can come, but the chance that it will be recovered is very low. There are additional reserve classifications, but I don't think CIT will go that far. CIT is just basic oil and gas. They don't go deep, like I put here anyway. So that was the reserves. Then we look at pricing of crude oil. What is going to ask you about the oil types? Yes. So the exploitation and the life cycle I talked about. What were the stages I gave you? Exploration, right? But mostly you must get the
Exploration, appraisal.
yes. But you must get the license first. Do you get it? And that is the right acquisition stage. So this question is a typical question that can come straight for 10 marks, right? So enumerate the main phases of natural resource exploitation, bringing out the key distinguishing features and or activities involved in each stage of the operations. Now you can go to the exam and you get activities like this same question, where you have to list all the activities and explain them. Or you can go to the exam and then they just ask you about just one part. Just what? They can just ask you about just what?
One part.
One part. Do you understand? So
Yeah.
just prepare yourself. Any part can be examined on its own. On its what? On its own. And this stage does not only apply to petroleum. You can go to the exam and they bring it from a mining perspective the same. They bring it for timber, for fisheries, anything. So far as it involves minerals or petroleum, you are good to go. So please, let's go. You read and then we go. Then we look at the activities there. That is the most important. So that if you even get a calculation question, you know that, okay, this one, it is this stage. So under petroleum, this is the right acquisition stage is where normally you pay the bonuses. Do you remember? The signature bonus. Okay. And then the license fees. Okay, that's the right acquisition phase. That's why signature bonus, we always capitalize it, whether signature or production bonus. I'll teach you how to deal with all that. We capitalize them. Makes sense. All right. So please read and let's go. Let's look at the stages quickly and take another question. We have a lot to do. Please read and let's go. Who is reading?
Okay. Concession or rights acquisition phase. The concession or rights acquisition phase involves the processes necessary to secure the legal right to explore natural resources within a designated area. The phase includes the arrangement and negotiation of exploration and extraction rights with relevant authorities and stakeholders. It ensures that the necessary permits and licenses are obtained, settling the groundwork for the subsequent phases of resource exploitation. Okay, so 2, exploration phase. During the exploration phase, activities are focused on identifying and locating natural resources using various techniques such as geological surveys, geophysical methods, and remote sensing. The phase involves collecting data through these methods to analyze and interpret the presence and potential quantity of resources. The exploration efforts aim to map out resource deposits and assess their distribution and concentration. Evaluation and appraisal phase. In the evaluation or appraisal phase, the seismic data and other information gathered during exploration are analyzed to determine the commercial viability of the natural resources. This phase involves assessing whether the resources can be economically extracted and if the investment required for development is justified. Key consideration includes resource quantity, quality, and the economic feasibility of extraction and processing. Development phase. Prof. Development stage. The development The development phase is characterized by the installation of machinery and equipment necessary for commercial production of natural resources. This phase involves the construction of infrastructures such as drilling rigs or mining facilities and the implementation of extraction technologies. It prepares the site for large-scale resource extraction and ensures that the operations can proceed efficiently and effectively. Production phase. The production phase is where commercial extraction of natural resources actually takes place. This phase involves the extraction, processing, storage, and transportation of resources to distribution points for market delivery. It includes the operational activities necessary to bring the resources from the extraction site to the market, ensuring that they are efficiently processed and distributed. Abandonment decommissioning phase. In the abandonment or decommissioning phase, which is specifically relevant to petroleum operations, the focus is on the closure of production activities. This phase involves dismantling production facilities and ensuring that they are safely removed from service. For mining operations, this phase is known as the rehabilitation phase. It includes setting aside funds to restore the site to its original condition or to a state that mitigates environmental impact. It is crucial to ensure that wells, pipelines, mines, and other facilities are decommissioned safely to prevent harm to the public and the environment.
We have what?
Okay. Relinquishment phase. The relinquishment phase pertains to the release of the concession or exploration right back to the licensor. This phase may occur due to the conditions stipulated in the exploration agreement or if no commercial discovery is made. It involves formally returning the rights or license to the relevant authorities, often including a final assessment to ensure that all obligations have been met and that the site is properly managed before relinquishment.
Okay, stop there. Now, I told you every diet, this can come fully or a part of it can come. Let's see something. I think this is the document they shared. Is it clear? It looks like it's not clear. Just write short notes on the following. Okay, oil and gas. Explain the concept of ring fencing. You can see the ring fencing I talked about. Can you see it there?
Mm.
So in the framework, was this there? Was this in the framework we looked at?
Mm.
Was it in the framework we looked at?
Yeah.
Petroleum Wealth Fund, Petroleum Revenue Management Act. Can you see? You see it's there. Ring fencing, you see there, 6 marks, okay? It's a framework. When you master the framework, any question that will come, you'll be ready for it. Okay, we go. Now look, unitization redetermination, was it in the framework?
Mm-hmm.
Okay. Now he said what? If taxation is a major consideration in deciding which offer to accept, would you advise him to take up in light of this provision? Support your choice with relevant tax. Yalmino has received 2 appointment letters, one to work with the GRA as a tax official, while the other was to work with Wangara Mining Company. The company granted a valid mining lease. Both employment contracts make provision of accommodation as part of the contract. You see miscellaneous.
Yeah.
Yes, Prof.
Yes.
Was it in the list?
So he will not be taxed on the mining one, but will be taxed in VI.
Yes. But you see miscellaneous. Can you see?
Mm-hmm.
Okay.
You see where it's coming? Okay.
Please, the mining one, it will only not be the accommodation will not be taxed if it's on the mining
Yeah.
site.
Yes, if it's on
Yeah.
the side, that's what you have to
Yeah, or proximity to the mine. Yeah.
Mm.
you make reference to the income tax regulations and then section 4, all right, of the Income Tax Act. Now, the rehabilitation, you see, rehabilitation. Which part of the life cycle can we find rehabilitation?
So,
Is it the last one
The
No,
last cycle.
part one.
of mining?
The last but one. We have
Last but one.
decommissioning
decommissioning or abandonment of field before
or
relinquishment.
abandonment.
You
Yes.
see here it came as rehabilitation, which is for mining. We just read it, right? Let's go and think. I told you each part can be examined separately, Shadia. In the abandonment or decommissioning, which is specifically relevant to petroleum, the focus is on the closure of the production activities. This phase involves dismantling production facilities and ensuring that they are safely removed. For mining, this phase is known as rehabilitation phase. It includes setting aside funds to restore the site to its original condition or to a state that mitigates environmental impact. It is crucial to ensure that wells, pipelines, mines, and other facilities are decommissioned safely to prevent harm to the public and the environment. Are you gradually getting the framework? It's not about the questions I'm solving. No. It's the mindset behind it.
So, Prof. So, with the rehabilitation, you can't go and say that it focuses on closure of production and.
Yes, that is the explanation. But the law itself gives us how to treat rehabilitation and then what do we call it? The other one, Kaifen is saying decommissioning fund, and that is what we are going to do now, right? So let's go to the Income Tax Act and let's go and look at how to treat these ones once and for all, so that once we are done. So now anything we'll look at for oil, we'll look at it for anything we look at for oil and gas, we'll look at it for this IDM thing. What is this? Oh, they are changing their systems and they are just worrying us to buy new software. Which one is this? Where was I? You just fault my this thing. coming. Let me just off the. Okay. So we have to visit the Income Tax Act. Let me try and see if I can open the Income Tax Act. Then I show you how to deal with this in case it comes. Okay. But you are just prepared for it. Maybe the last diet rehabilitation came. This diet they can decide to bring what? Decommissioning. Do you get it? Are we all
Yes, sir.
So you just prepare. That's all. It's about preparation. There's no shortcut anywhere. There is a shortcut, but you give it to students, they become lazy. So I don't do shortcuts. Or I'm not being fair.
It's last minute too.
I said there are shortcuts, but I don't do shortcuts. So that's still you have 2 days. You can go and read. Maxwell, you said my voice is low. Is my voice low? Today my network is very slow. I open a document and it takes ages to open. Why? Oh. I open the class at all. But when I open this thing. So look at minerals. Let's go to section 84. Am I right? Section 84. Yes, 84. Read for me. Quickly, we have
Approved rehabilitation funds, an amount accumulated in or withdrawn from an approved rehabilitation fund by a person who holds a mineral right for the purposes of rehabilitation of the area which is the subject of the mining lease is exempt from tax.
Okay, so usually when you set up a fund for rehabilitation, okay, whether you accumulate or withdraw from it, it's exempt from tax. But it's only taxed when there's a surplus in the fund. So this rehabilitation or decommissioning comes from IAS 37, okay, where you know that you have an obligation to clean up the place. So you start setting up a fund, okay, maybe the next 20 years you want to rehabilitate or restore it to its original position. So let's go. Where there's a surplus,
Where there is a surplus in the approved rehabilitation fund, after a person completes rehabilitation of a separate mineral operations conducted by that person, or at the time the person breaches an approved rehabilitation plan, the surplus shall be included in calculating the income of the person from the separate mineral operation for that year of assessment.
So you get the whole idea. So decommissioning fund or rehabilitation fund here is actually exempt if it is inadequate or you set it up and then you are withdrawing from it or you're contributing to it. But once, let's say you set up 60,000, but what you end up having in it is 80,000, that surplus is taxable. And also, if you breach an approved rehabilitation plan, okay, so let's say that in the plan you are not supposed to withdraw from it, and then you withdrew from it before the time, you have breached the plan. In that case, any money inside becomes taxable. Does it make sense to everyone?
Yes, sir.
Who didn't get it? So this is for rehabilitation. So what is rehabilitation?
The last one, you said any money inside is taxable.
Yeah.
I thought it's only the portion that you took out of the fund known as taxable.
No, that's not how it works. That's not how it works. The portion you take out of the fund is not even taxable, it's exempt. But I'm saying if only there's a surplus left in the fund after you withdrew, that surplus is taxable. Or you broke the trust of the plan, meaning you breached the plan. You want to
I can use it for a different thing than the rehabilitation.
Yes, that's what I mean.
And then it's taxable.
Yes, then it's taxable. And also when there's a surplus in the fund, it's taxable.
My question is, let's say 100,000 in a rehabilitation fund, and then you take 20,000 to go and do something. So the
Then you have
20,000 is
breached
the
the
one that
plan.
is
Yes, so the It will not the 20,000. You have breached the
The
plan,
whole.
becomes taxable.
Mm.
Do you get it? But you understood the surplus. So you want to do 100,000, but you have 200,000 in the fund. So the extra 100,000 becomes taxable.
Mm.
So look, the law says what? An approved rehabilitation fund in respect of mineral means a fund established as required under any applicable mineral agreement or approved rehabilitation plan. Approved rehabilitation plan in respect of mineral means a plan for reclamation, rehabilitation, or closure of operations approved by the minister responsible for mines. So anytime rehabilitation fund comes, you have to define these ones and add it to it to get the full mark. So students who just went with the provision under section 84, are you getting it? Without defining this, will lose the 2 marks there and only be marked over 4. You get?
Yes, sir.
So let's go to section 70, I believe. Sometimes I'm very tired. I don't even think I remember the section. So let's go to section 70. Section 70. So we are on point, eh? Decommissioning fund. An amount accumulated in or withdrawn from the decommissioning fund for decommissioning is exempt from tax. You see how petroleum and minerals are just the same, but with different names. Where there's a surplus in the relevant decommissioning fund after a person completes decommissioning of petroleum operation conducted by the person, or at the time he breaches an approved decommissioning plan, that surplus shall be included in calculating the income of that person from the separate petroleum operation for the year of assessment. How is this different from the other one? Same, right?
Is it?
So whatever you do for decommissioning fund is the same thing you do for approved rehabilitation fund.
Yes, Prof.
Good, good, good. So
So, Prof,
yes, please.
yeah, so what you just read, meaning that the the excess is added back and taxed
Yes,
accordingly
yes. And when we look
at
at
30,
income,
at 35%
yes,
petroleum income tax.
general, it is the same thing. See, let's
Okay.
go to petroleum income. I want to show you something, right? So look, let's go to petroleum income. I want to show you something. When it comes to the income of petroleum, you will see it there. Let me show you. Section 60. Yes. Income from petroleum operations, there. Subject to 65. The income of a person for petroleum includes the market value of petroleum obtained from petroleum agreement area that is disposed of during the year. So when you sell the oil, right, that was allotted to you. Compensation received, whether under a policy of insurance or otherwise, in respect of loss or destruction of petroleum from a petroleum agreement. So we are saying that at the end of the day, if let's say your field got burnt, right, and an insurance company compensates you from the petroleum that you have lost, do you get it? It's still an income to you. Makes sense? An amount derived in respect of sale of information pertaining to petroleum operations or reserves. So you know that, let's say I was at the tunnel, Cape 3 Point, right? And I went to do exploration there, okay? AB Petroleum. And then another company called CD Petroleum comes and say, oh, chairman, I've also got a license for the tunnel Cape 3 Point, right? Tunnel West Cape 3 Point. Can you kindly sell me the data that you have already done the exploration and all that, right? So you know everything happening there. Instead of me coming to do the whole exploration again, I can buy that information from you. Makes sense. The seismic information, geological and geophysical information. Makes sense.
Yes, sir.
And most companies, because I've already passed the exploration phase, I can sell that for huge amounts of dollars. And that also is treated as what? Petroleum income under our law. Make sense? So how many
Yes, sir.
incomes have we seen? 1, the sale of petroleum. 2, compensation for destruction, right? 3, sale of information. 4, a gain from assignment or disposal of an interest in the petroleum right with respect to which operation is conducted. So if I sell my petroleum right, let's say I decided to sell the petroleum right to CD company. then it's a gain to me, right? It must be treated as an income. So usually you are comparing the costs against what? The consideration that you received, right? If the consideration is more than the cost, then you have a gain. It's treated as an income. Does that make sense to everyone?
Yes, sir.
But look at the E part. It said an amount required to what? Be included
Be
under
included.
section 70 in respect of a surplus in the decommissioning fund. So once there's a surplus, it shall be added to your income because it is treated as an income here and therefore will be taxed. Does that make sense?
Yes, sir.
Good. Then we have an amount received after production commenced as reimbursement of cost and a premium to a sole risk party under the sole risk terms of a joint operating agreement. So when we come together, let's say party A, party B, party C comes together, right? And then this guy used his own money to carry out the exploration and development. And then these guys decide to come together to pay him. Is it not an income to him?
Yeah, it is.
So you treat it as such. This is what these sections are saying. All right, so we go. Now, any amounts derived by the person during the year from or incidental to the operation are included in calculating income. So if at the end of the day, if we decide to do a joint arrangement and at the end of the day a surplus comes and we are all enjoying, it is also an income to me. It's incidental, right? It happened because of the operation. In management accounting, we say directly attributable. Do you understand? Yeah, we were all going to cook. Look, we are all going to cook food, right? And then we bought fish. Before we opened the package, it's supposed to be 12 pieces of fish in the carton, right? But when I opened the carton, we got extra 5 pieces. So what happens then? Abi, if we are sharing, everybody will also get extra because there's an extra that came up. True or false?
True.
Yeah. So these are incidental issues. So you see the way these things are, but you just need to know them and they are fun to know. All right, so we saw the stages, right? Every stage can be asked. Now, what I'm concerned about is exploration and then the evaluation or appraisal stage. So the concession or right acquisition, obtaining petroleum blocks in Ghana is another question they can ask you. So we are going to look at how to acquire petroleum blocks in Ghana. I don't know whether I have that question. Yeah, I think so. Let me look for it. Petroleum blocks. You see how I'm taking it?
Yes, sir.
So if we see it, yɛkye ne eku no, last stop. We don't waste time again. So let's go from petroleum agreement because it's the agreement that was specified, right? I don't know whether I have this question or the questions are more than 2,000. Okay, so I think this should suffice. Yeah. So it was just under the thing, right? It was just under. I told you can examine. Okay, so August 2021. Look at the first question. It says mention key natural resource operations in Ghana and explain the processes involved in each natural resource operation. What question are they asking for? The life cycle, right?
Yes.
Yeah. So what are you supposed to mention?
Okay, so you
What's the key?
mentioned the resources, that's
Petroleum and mineral.
mining and then petroleum.
Okay.
And then under each of them, you state and explain the stages.
Okay. And what are the stages? Concession or right acquisition, exploration, evaluation, appraisal, development, production, abandonment, decommissioning, relinquishment, right? You mentioned them, you get your 6 mark. And how do
And what are the mineral?
They follow the same principle. They are the same. Whether petroleum or mineral, you go through the same, you get a license, you go and search, you start putting gathering data. After gathering the data, you set up machines, you start extracting whether gold or oil, right? Then after you do everything, you restore the land bank to its position, then you give it back to the government. Meboa. Is it not the same for all the minerals? Even fish. Get a license to fish. Meboa. You start gathering data about where the fish is. What do? You set up machines for fishing. Not so. You start pulling the fishes to the surface. When you finish, you must restore the fishes back by putting fingerlings and other things to grow. When you finish, don't you give back the land to the government? It's the same thing. Timber, the same. It applies to every natural resource. If you go, they ask you mineral life cycle or the life cycle of petroleum. Are you getting it? It's literally the same thing. Or the 3 types of petroleum.
Prof.
Yes, please.
So under mining, I thought you mentioned the reconnaissance that's equal to the exploration, then prospecting.
You can still use exploration, though market. Said
Okay.
they
Okay.
of operations
Okay.
in natural resources. They didn't specify. So all natural
Okay.
resources go through these phases. Do you understand?
Mm-hmm.
Technique.
Yes, please.
Otherwise, you go and beat about, you waste time talking about mining differently, petroleum, but they are all the same stages. Are we okay? Makes sense?
Yes, sir.
Good. So you see, each of these stages have tax implications under the law. The right to acquisition stage, this is the same as the pre-operating stage, which includes all the activities, the arrangement and negotiation of the right to operate or explore natural resources within a designated area or jurisdiction, subject to specific terms and conditions. So this usually involves the operator or the contractor and the state, which is the owner of the resources, in this case, Ghana. Okay, so when you go to Section 5 of the Minerals Act, Minerals and Mining Act, only the minister on behalf of the President of the Republic can grant such rights and concessions subject to ratification by Parliament. So a mineral or mining right shall not be granted to a person unless he's a body corporate under the Companies Act, or under the Incorporated Private Partnership Act. So you remember that when we started, I told you something. I told you that sometimes they can ask you to distinguish between a partnership and a company. Do you remember? Under the miscellaneous.
Yes, sir.
Yeah, so you can go and they ask you the different ways government or contractors can venture. What kind of organization can they be? They cannot do sole proprietor. They can only do partnership. They can do companies. They can do JVs. All right. So you must know what those things mean. So how are these taxed? So all the costs and expenses incurred in order to secure concessions and the right to explore, search and develop and possibly produce oil and gas may include application expenses for acquisition of rights, concession costs, and the rest. Now, these costs are usually capitalized under each accounting principle. That is whether the successful effort method is used or the full cost method is used, right? But however, for the purpose of acquisition costs, they are treated as capital expenses for which depreciation allowance are granted at 20% on straight line basis, which is capital allowance. So you see how it is. So this question, be careful with it. So you go and then they are asking you each step, how is it taxed under our law? And we know that here at acquisition stage, those acquisition things, all those costs are put into a single pool, including bonuses, and then capital allowance is granted. True or false? How do we tax
True.
costs? Put into a single pool. No, be so. But government doesn't contribute towards exploration. Evaluation is treated the same way. Development is treated the same way. But production costs are expenses. They are expensed for the period, right? Treated as allowable deductions. Abandonment or decommissioning costs only if there's a surplus in the fund, right? That's when it becomes an income. But they're actually exempt from tax, meaning that most, if they are inadequate, they are treated as allowable deductions. And relinquishment mostly has no treatment because you are just giving the land back to the government.
So, Prof, so can you say that the production costs are summed up and given capital allowance?
Yes, they are summed up and given capital allowance. So any income, any cost from concession or right acquisition stage, that's licensing, from the exploration stage, all these things are costs incurred before production commences. And even from mining and petroleum, we know all costs that are incurred before production commences are what? Are put into a pool until production commences, then we grant capital allowance. So each of them, you just say that put into a pool until production commences, put it to a pool, put it to a pool, put it to a pool, right?
Prof.
Yes, please.
So please, how do you treat depletion cost?
Depletion is the same as depreciation. It's allowed for tax purposes. But when it comes to what do we call it? Successful effort and then full cost, they are expenses. Depreciation is an expense. See, depletion is the same as depreciation, but for mineral hubs. Like if you have a mine, okay, because of or a quarry, we don't say depreciation of a quarry. We say depletion of a quarry. Okay, because it depletes as you are fetching the sand. Some people even use degradation, like land degradation. Do you get it?
Okay.
Yeah, so depletion is the same as depreciation. And amortization for intangible assets. So when they say depreciation, depletion, and amortization, is literally the same thing, but for different kinds of assets. So
So you add it back.
yes, usually we add it back. Instead of saying add back, say disallow. It's not all the time that you have to add back. You only add back if it has already been charged. So add back is just to reverse the original accounting to make it zero. So in accounting, we less. So if you add back under tax, you are trying to make it zero. That's why we add back. So if the thing was not already there, why do you add back? you just don't include it at all. It's an excluded expenditure subject to section 130. Okay, so you put those things there. This is how the thing actually is. Any question? Any question? And that is 10 marks. No joke. You see, this area we are looking for the exploitation of natural resources. You see, it has a huge mark. And we've seen several questions. Can we go on? So still in the licensing stage, you see a question solely came from the licensing stage for 4 marks. Key steps in obtaining petroleum concession in Ghana. So let's go and see how we obtain petroleum concession in Ghana. Where is it, card? Did I record it? Yeah, we'll get there. I think it's down there when we get to the legal framework. So don't worry. Discuss the key benefits associated with the surface right. This question came in August 2024, and most people left it. This is still under the acquisition or right stage. You remember that licensing and acquisition, you need a surface right. A surface right is simply the legal right to use the surface of a piece of land, simply the license. You see how they tricked you? You see how they trick students? You see how they trick students? You see how they treat students?
Yes, sir.
Key benefits associated with a surface right, a license. Okay, so a surface right refers to the legal right. That means you have been licensed to use the surface of a piece of land or sea for specific purposes, like agriculture, construction, residential, commercial development. It grants the holder authority over the land surface, but that does not necessarily include what?
Ownership.
Ownership. So that is why there's relinquishment. If I give it to you on a lease for a very long time, does not mean you own it. So at any point in time or after a specified period, I may take it back. All right. So we can have ownership of subsurface, that's minerals, oil, gas. We can have air rights above the land. In many jurisdictions, surface rights and mineral rights can be separately owned, meaning that a surface right holder may not have the authority to extract minerals beneath the land unless explicitly stated. So you can have surface rights, okay, but you may not go beyond the surface. So this is where people have, let's say, if I'm dealing with a quarry, right? Or I'm dealing with timber, you know, those ones are above the surface. True or false?
Mm-hmm.
So anything beneath the surface, unless it is explicitly stated in the agreement, I cannot dive deeper because I only went for a surface right. Does it make sense?
Yeah.
Who didn't get it? I believe this question and answer approach is helping.
Yes, sir.
I think I 8 marks.
And they said, and then its benefits. So you are coming to know the benefits. What happened? I don't know. We want cool chop, share. Oil and gas, no cool chop. So the key benefits of surface right. Why do you think surface rights are important? You can use your mind, but let me enlighten you small. One, exclusive use and control because it is yours. You have applied for it, right? So the holder of the surface right has the exclusive authority to use and control the land for lawful purposes. Like you can use it for farming, construction, business operations without interference from third parties. Even government cannot interfere. So there was a case where this guy had a land. The land was rich with deposits, okay? And then someone acquired the surface right for the guy's land. He was being paid royalty, but they passed his back to take what was under the land, and he sued them, and he won the case. Do you get it? So that's exclusive use and control. Makes sense. Please be writing these points. So, are we okay? Are we okay?
Yes, bro.
Good. Two is security of tenure. Now, surface rights provide long-term security for the right holder, ensuring that they can develop and use the land without fear of arbitrary eviction. Okay? Because now there's long-term security. I told you it can be for 30 years, 25 years. So it is particularly important for businesses and farmers who invest in land improvement. Then we have the right to develop the land. Okay? Now, the surface right holder can develop the land by constructing buildings, roads, irrigation systems, or any other infrastructure to enhance the value and productivity of what he is doing. Okay, so yes, I've given you the land. Look, surface rights, let me give you a typical example. In Ghana, okay, if you want to do massive farming, you see, when you go to the rural areas, you can go and lease land from the
Chiefs.
kings, right? For some number of years, meboa. Sometimes the king tells you that my brother has died, I'm taking all the land, and there's you to me foco. Get it. But you realize that you put irrigation systems, you do all that. That's surface rights. Are you getting it? So if this thing should
Yeah.
come, none of you is going to miss it, right?
Mm-hmm.
Okay, there's also a potential for economic benefit. The landowners can generate income by leasing, selling, or using the land for commercial activities like agric, real estate, and industrial development. You can also get land-based loans and credits. Like there are some companies that give loans to farmers and those things. If you have a surface right, you can enjoy them. Then you have legal protection against unlawful interference, like government interfering and all that. Sometimes that's why those who buy these lands from the chiefs, the government doesn't go there because there's land and legal protection against those ones, right? And the surface right can often be passed to heirs or people. If I've done this farming for a long time and I have this arrangement with the kings, I can just transfer it to my child and carries on the agreement, right? And there's freedom to enter into this agreement. Okay, so these are the benefits of surface rights. I hope you won't forget. Because at this time, I know people's memories are heightened. I hope you won't forget. That's why I try to relate it to our normal Ghanaian setting so that at least you get something to say. Who has a question? Who has a question? That means Obiya, okay. Okay. Next phase of the plan. The petroleum industry has 3 different but related operations. Mention the 3 operations and explain the processes involved in each operation. You see, it's the same area, exploitation, but you see how it came. This is the common type of questions that people are used to. So if they go and this one doesn't come in a different way, CIT assessor trend on assessor trend BI. They have never changed any trend. You are the one who has not learned. So look, you see.
So this one you explain the upstream, give all the
yes,
things and the upstream, midstream, and then downstream.
The upstream, midstream, downstream is still the same. It is still the same exploitation phases that we saw. The life cycle. Do you remember? Still the same thing, but now you've broken them into 3 levels. You see another way that same area can be asked. So that exploitation phase, it has a lot of questions. Are we learning something? Good. So now let's go and see how this 20 marks is spread. And you will be amazed. Look, just by saying there are 3 types of petroleum operations in Ghana, namely upstream, midstream, downstream, you get 3 marks. So students who don't like writing preambles, you are doomed. Let me show you what I mean. You see a lot of students, look, this thing, you guys are professionals. Some people still do it. They go and then they just write, let's say three, maybe it's question 1A. Then they just say A, upstream sector. Meboa. If you are victim, then you start writing. They don't even underline, they do this. Meboa. Then II, midstream sector. Then they write. Then III, downstream sector. No, sir. This thing that you are doing, you don't get a full mark. Always, your answers must have a preamble. You are a professional, a senior financial executive. Why are you writing like this? If you are presenting something to the board of directors, do you just start or you have some preamble, some intro? It's the intro that has the marks. So sometimes intro required to measure 5 marks, and this will be 15. You see, exam strategy is not just about knowledge. If exam was about knowledge, then people with PhDs wouldn't even fail CIT and ICA. A strategy. I told you, just by saying there are 6 phases of natural resource development in Ghana, you get your 3 marks, you are gone. Before you even start talking about that. All right, so are we getting there? I hope you are learning something. Good. So first, we say that we have the upstream sector. And the upstream sector, what do? This is where they do what? The exploration, the rights acquisition, right? The exploration, the appraisal, and then the what? And then the development and what?
Production,
Production,
decommissioning,
and then the decommissioning or abandonment.
and relinquishment.
Yes. So all this part, they do all these things, right? So you see the right acquisition stage, all those things are actually in the upstream sector here, right? Then from there, once you actually do all these things, now in exam, once you say them, you must explain all of them again. No? Do you get the whole idea? Because
Yes, sir.
sector alone has the 10 marks. What did I say?
The sector alone has 10 marks.
Then the midstream and downstream have 7 marks. Okay. Then the intro has what? 3 marks. If you add it up, what do you get? Is it not 20?
Yes.
Yeah, so this is how this question is marked. You see that thing?
Yes, sir.
Good. So when this question comes, you explain the upstream sector, it's 10 marks, the midstream.
Bill,
Yes.
please, what happened to the downstream?
Downstream is Shell, Total, those ones. That place we sell. That is marketing the OMCs.
It involves the refineries,
I'm asking, there is
sales
no
and market.
assigned to that part.
Is there?
Don't they assign marks to that part?
3 marks. I said 7 marks for midstream and downstream. That's what I mean. You get 7 for these two. Then the intro is 3. That's what I mean. Do you understand?
Yes, sir.
So upstream is where you do EADP. You know what EADP does? Exploration, appraisal, development, production. Then once we produce or we extract, how are you getting it? We go to what? Midstream. And midstream, some people say they just do what? Transport and storage, right?
Pipeline.
Yeah,
Laying
pipe
of
stacks, vehicles, tankers, and the rest, right? Then from there, they now come and refine them and sell. So refinery and sale. It depends on how you look at it. Sometimes you put refinery here. It doesn't really matter. So refinery and sale or marketing is downstream. So this is where you look at what? The Shell, the Total, the what. Yeah. You look at the transport companies, and then here you look at the Cosmos, the Tallow, and those. So this one can get your full 20. Then this type of questions can also take a different turn where they ask you specifics, right, from different areas. So here they are telling you to talk about a dry well and reservoir, rigs and drills. I believe, Gideon, you were mentioning these things, right? Yes. Anamibwa. Earlier, when I was asking whether they are
Yes, please. Yes, please. Yeah.
right. Yeah.
Yes.
And this question is from my question bank. There are a lot of questions there. Plenty. So we continue. This thing is not available to the general public. So depletion and depreciation, you see, it came decommissioning, rehabilitation, small scale mining, and mineral operations. And this thing is 20 marks. Can you imagine?
We don't need my show.
Very shit. Oh, but wait, there wouldn't assuming a student does not know dry well and reservoir, they can do rigs and drills. By all means, they know depletion and depreciation, decommissioning.
Dry well. We didn't find oil in the wells.
Okay.
You explain it literally.
That's what it actually means. Dry well has nothing. Okay, so let's see them. So a dry well is an exploratory or development well drilled to find oil or gas, but fails to produce commercially viable quantities of hydrocarbons. It may contain water, non-commercial hydrocarbons. That means the ones that cannot be sold or be completely barren or no is that's what you said, you'll be given. So dry wells are considered unsuccessful and are often written off as exploration expenses in tax calculations. Example, under the successful effort method. Makes sense. Simple, right? I hope now when dry well comes, you can explain.
Yes, sir.
Thank you. Reservoir. Now, a reservoir is a subsurface geological formation that contains significant accumulations of hydrocarbons, that's oil or gas. It's always oil and gas because what brings the gas is the heat from the oil, the chemical reactions, right? So it's always oil and gas, not oil or gas. All right. So it consists of porous and permeable rock layers. Okay. Look at what they can also ask you. They can say, what is a porous well?
Boy.
Then people get confused. So they can say, what is a dry well and what is a porous well? A porous well is a reservoir. Because if it is not porous, the oil cannot come to the top. You can see a place that has oil, okay? But when you dig, there's fire. You can never cross that boundary. That means it's a non-porous well. Do you get the idea? You see
Yes,
how
sir.
they tricked you. Yes, so this one.
Phil,
Sir,
there is a one. Can you say that it contains both producible and non-producible oil?
Of course, why not?
Because when they lost me and Bini Baba.
sir,
Yes, please.
there's a term called hydrofracking. Is it a term that is used to, extract hydrocarbon from reservoirs?
It's one of them. There are many methodologies.
Okay.
So every company, some companies come from the US, they use different techniques, others come from other places, right? You understand?
Yes, sir. Yes, sir.
What
Prof,
happens is that
can you say that reservoir is the same as oil in place?
no. The reservoir has oil in place and other things.
Okay.
Do you get it?
So, Prof,
Yes, please.
can we say they are hidden behind porous and
Non-porous.
permeable rocks?
Yes, that is it.
Okay.
If it's not permeable, it cannot come to the top. That is where
Okay.
the hydrofracking we were saying comes to play. So we will
Okay.
inject water. Do you get it? We'll push
Yes, sir.
so that the water will go and push those rocks so that it can come to the top. Do you get what I mean?
Yes, I was.
So if there's a particular area that the gas or the oil is not coming, we can inject water to push them to the top. Do you get it? And I said it's one of the methods, but usually, rarely do you see them use it. It's one or two because it requires a lot, right? Because you can easily damage and then it can cause a bad reaction. So it depends. Do you get it? Some people even inject more oil to push further oil to come out. This thing we do it, right? Also, sometimes when your sink is clogged, what do you do? When your sink is clogged, what do you do?
You push in more water.
You push in more water before you see boom. Then need to push this thing out, right? That's an example of hydrofracking. All right, but I'm not sure to go that far. But I hope we are learning something. Good. So reservoirs are primary sources of commercial oil and gas production, and their value significantly impacts the taxation and revenue of oil companies. Now let's look at what we call a rig and what we call a drill. We all know oil rigs are the things that we see on the sea, right? Those machines that people put there. Yeah, is that you can just explain it in that fashion and you will still be given the full mark. All right. So an oil rig is a large structure equipped with machinery and tools used to drill wells for oil and gas extraction. So there are different types of rigs, including onshore and offshore rigs. So there are some rigs on land, there are some on the sea, okay, depending on whether they operate on land or sea. So the cost of rigs is a major capital expenditure in oil and gas operations and is often subject to tax deductions and the capital allowances. Do you get it? So you see, anytime I talk, I include some sort of tax side to it. Okay, that's how I want you to be answering your questions. Are you getting it? Are you getting it? You know, anything that is of capital nature will be getting capital allowance. What about a drill? A drill is the tool that we use to drill, right? The specific tool or equipment used to bore into the earth or the sea. Are you getting it? To read the oil and gas reservoirs. They include the drill bits, the pipes, the associated machinery. Okay, and drilling costs are mostly exploration and development expenses. And in Ghana, what do we do to exploration and development expenses? We pull them into a separate pool, and then when production commences, we grant capital allowance. That easy, right? Good. Depletion and depreciation. What is the difference? Now, depletion is the gradual exhaustion of a natural resource like oil, minerals due to extraction. The more you take it, the mineral resources deplete. I was saying it the other time. Do you remember? So it is an accounting and tax concept that allows companies to recover their investment in natural resources over time through tax deduction. Okay, so because if I'm drilling, I'm losing part of the minerals. Do you get it? So I keep charging a depletion, which is like depreciation, based on a percentage of revenue or a percentage of the reserves, whatever. Do you get it? Then depreciation is the reduction in value of tangible assets, depreciable assets over time due to wear and tear, obsolescence, or usage, or even deflection of time, right? And we know depreciation is not allowed for tax purposes. It can be depreciation has so many methods I can't even mention, but people only think there are two: machine hour method, double declining method, weighted average method, straight line method. Even straight line, we have about 4 or 5 ways we do straight line, and
some of year digits.
some of years digit is there. So many methods, right? And it depends. But unlike depletion, which applies to natural resources, depreciation applies to fixed assets. So you get a distinction now. Depletion applies to what? Depletion applies to what?
Natural resources.
Natural resources.
Depreciation applies to tangible fixed assets, right?
Tangible fixed assets. Yeah.
Depreciation applies to what? Intangible assets. Makes sense.
Mm.
Makes sense.
Yes, sir.
Please come again.
Depreciation applies to fixed assets, tangible fixed assets. Depletion applies to natural resources like a well, like oil. Do you understand? Then amortization applies to intangible assets like a patent, a license, right? We amortize it over the years. So if I acquire a license for $1 million, okay, and I know that I'm using this license over 25 years, so I can come up with an amortization policy and divide this over 25. Then each year I recognize the portion of the license that has dropped or that has been consumed. Does that make sense?
Yes, sir.
Anyone with a question? So far, so good. Good. Decommissioning and rehabilitation. Now, decommissioning refers to the process of safely dismantling oil and gas production facilities after the end of their operational life. Now, this includes plugging wells, removing water, and restoring the.
Yes, please.
Please mute your mic. Oh, please mute your mic.
So decommissioning costs are substantial and often accounted for in financial statement through decommissioning provisions, according to IAS 37 and IFRIC 12. That's the standard and the standard interpretation. Now, these costs may be deductible through decommissioning provisions. Now, these costs may be deductible for tax purposes, reducing the taxable income. So when we go to deductions of companies, which we'll look at later, you see that they are also allowable what? Deductions, right? Unless there's a surplus where it becomes an income. You remember I told you that when these decommissioning costs are inadequate, they are charged as allowable deductions. What do I mean? Look at this. I made a provision that I will spend 600 million Ghana cedis to decommission, right? To restore the land back to its process. Then at the end of the day, I ended up spending 700 million. What happened? It means that whatever I saved was inadequate. So I had to incur extra expense of how much? 100 million.
100 million.
That this should be treated as what? An
Allowable deduction.
allowable expense. Makes sense? Makes sense. The same way that if there's a surplus, I treat as an income. If the fund is inadequate, I treat it as an allowable expense. Are we all okay?
Yes, sir.
Good. So go to rehabilitation. Now, rehabilitation is a process of restoring land and ecosystems affected by oil and gas operations or mineral operations, right? It depends from the international way, but in Ghana, we use rehabilitation for minerals. Do you understand? So we'll rather say that for what? A mineral operation, so land reclamation, reforestation, pollution mitigation. In many jurisdictions, rehabilitation may be tax deductible or funded through environmental bonds required by regulators. And we know that in Ghana, rehabilitation is just treated like decommissioning, right? If there's a surplus or a breach, it's an income, right? But if it's inadequate, it's an allowable expenditure. Good. These things are not difficult, but if you don't know, you don't know. Small scale mining refers to mining activities carried out by individuals or small groups using relatively simple tools and equipment, like what do we call it? Shovel. I'm see Sophie. Pickaxe. It's a pincas. What else? That thing that they turn like this guy. You know, those are the simple tools.
Yeah, they use stamping machine.
The typically involving artisanal methods, minimal mechanization, and lower production volume. So the small scale miners are often subject to different tax regimes, including reduced royalty rates, simplified licensing processes, and incentives to promote local economic development, right? Subsidies, sometimes government. This is not galamsey. Please don't get it wrong. People think when we say small scale mining, we mean galamsey. No, these are people who are registered.
Yeah.
They are registered, but some people think small scale mining is galamsey. Galamsey big scale that wafa workers. All right, so let's look at mineral exploration. Now, mineral exploration is the process of searching for mineral deposits through geological surveys, sampling, and drilling. You can end here, right? Then you now explain more that during the exploration phase, all costs are pooled under the Ghanaian law. You will get it. Makes sense. Now, very interesting. Question number 3. Natural resources include minerals, petroleum, and other resources found in the forests, lands, and water bodies within the frontiers of Ghana and are stipulated to have been owned by all citizens of Ghana. However, these resources are found to be exploited largely by foreigners instead of citizens. Wow. Write short notes on the following: minerals, petroleum, natural resources. What question are they asking?
Minerals.
So,
It's exploration. Me, all right. I'll do the stages for them. The minerals and
Okay,
recognizance.
okay, so
Yeah.
I would define each of them and then write the stage under each of them.
Okay. This is a 20 marker. You just literally talk about what they are, maybe a bit about how they are exploited and their tax positions. Do you still be given, right? So all that you guys are saying is still correct, right? Then the next question is brainer. We also use wording. Explain why foreigners are the key actors in the extractive sector of the Ghanaian economy. Obi Abekasa, we have 16 people on the call.
Because of Kudi.
Financial capacity,
Mhm.
advanced technology.
Lack of expertise.
Lack of expertise. I think this is a very strong portion, very strong point.
Technology.
And the investment, huge capital investment.
Okay, I'll take a very strong point. Somebody was saying something, but I didn't hear the person. Can the person come again?
Technology.
Yes, technological advancement. Yes. Yes, everyone must talk. Why is in Ghana
Organized operations.
organized operations? I'll take it. Yes, more points, more points. Idea where about
Because of
Possession
technology
of
transfer.
because of
possession of
Technology transfer.
possession of technology for sustainable operations.
okay, technology for sustainable operations. Okay, I'll take it. Yes,
Prof,
yes, please.
I said technology transfer.
Technology
So
transfer.
they want them to come so that they will impact on the Ghanaians so that in the near future or at the long run,
So there's a
Ghana will
reason
also
for that.
Yes.
There's
Is
a
that?
reason for that.
Oh,
What you're saying, there's a reason for
That
that.
is foreign direct investment.
foreign direct investment. That is it. That's what the technology transfer, even for educational purposes, right? They are more inclined than us. So we bring them here so that we can be educated. Also, for economic growth, Meboa,
Mhm.
these guys have more resources, and when they come here, they tend to pay us a lot of money. If you say that,
So what of research and development?
yes, it's one of them. It depends on everything you say is right too. So far as you can tune your answer well. Here, there's no market for it.
How do I coin the fact that they control the organized market for the resources that are extracted?
Of course, that's one point. Explain if there have been some key actions or programs by successive governments to address the above assertions. What has the government of Ghana done to control this thing? I will give you one. Local content.
Nonsense.
I've said local content. What are some of them? The ways
You
government
said what? Local what?
content.
Local content regime.
What does that mean?
Oh, this is
Reservation of
you reserve some particular.
certain, yes.
So if you come to Ghana, you must employ Ghanaians to work for you. If you want to use machines, you must buy from local Ghanaian machine sellers. If you want to use staff, GMPC must train staff for you. Do you get it? So local
Okay.
and broni he has to include local participation, workers, tools, systems.
Okay.
I get and even
So,
suppliers.
sir,
Yes, please.
And
SP
also they
can
pay
SP
some. Okay, ask your question.
can SPVs come here?
Special purpose vehicles.
Yeah.
Okay, can you throw more light? Yes, it can come here, but I want to know the context. Are you saying why they are key actors, or you are asking about the actions? Because I know yours falls under B. So which one are you answering? Is it the C? Then you throw more light on it, or the B?
The one we are doing now.
So throw more light on it.
Well, I want your view.
Okay, so in terms of this,
Prof.
you are just setting up. Yes.
Prof, your mouth has gone far away.
Can you hear me now?
Okay.
Can you all hear me?
Yes,
Yeah.
please.
Yes,
They are
Prof.
saying that with special purpose vehicles, yes, they are used all the time. But then I want to know how it fits in what government has done so far. Because a special purpose vehicle is just a vehicle setup. So let's say this US company wants to benefit from, let's say, a concession in Ghana, right? He sets up a special purpose vehicle to acquire maybe a Ghanaian concession, right? So that when returns are sent, it can be sent back to him. So this is a special purpose vehicle. So I want to know how it fits in here.
So here, I think you can talk about monitoring and evaluation. Like the government has to monitor the activities of those upstream operations.
Okay. Yes. So one of the ways government has done this is through local content participation, right? And local content, be careful. Nowadays, almost every day, local content can come. And I believe last night, local content came, right? So if you have the time, just go to Google and download the local content regulations. It's very small and go through, okay? Because local content is very important. You can't do petroleum in Ghana without local content. Two, licensing, right? There's a licensing regime. So that can also check us, right? Apart from that, what else? We
And
have
then they pay for training. They pay some one-time payments for training so that the government can train
training and technological
Ghanaians. Yeah.
training and technological allowances, right? Even the fiscal regime is one of the ways that has checked this extractive sector, right? The legal framework has checked this, right? True or false?
Uh-huh.
The fiscal regime has also checked this, right? So that one city crowd will not escape, right? The various laws in our country, the regulations, the constitution, they are all ways that the government has been checking this foreigners' domination. Do you get it?
Mhm.
The GSP, there are some activities explicitly reserved for Ghanaians. If you're a foreigner, you can't go into it. Do you understand?
I think even Gofuska, they brought this way that the managing director should be a Ghanaian. See, at a point, all the white people left Ghana.
These are all part of the
Local content.
local content.
Mm.
So why foreigners are key actors in Ghana's extractive sector? Let's see. Did you get it? High capital requirement. Did we get it?
Mm-hmm.
Yay. Limited local expertise and technology. Did we get it? Yes.
Mm-hmm.
Historical influence of foreign investment. Since our colonial era, we depended on the white man. Meboa. Oh, it be true. No, be true.
Mm-hmm.
Access to international market. Yes, the foreign firms have established networks globally, so it can also get us that global network, right? Our legal and investment framework. Ghana's investment laws like the Minerals and Mining Act, petroleum ones, encourage foreign investment through tax incentive. It also leads to economic growth. Challenges in domestic entrepreneurs. Ghanaian entrepreneurs face what challenges in raising capital, navigating frameworks, and the rest. That is why we prefer the foreigners more. Makes sense.
Mm.
So, what are some of the ways government has addressed foreign domination? Local competence, I said local competence, local content and participation policies through the local content regulations, the Minerals and Mining Act, then establishment of the Ghana National Petroleum Corporation (GNPC) to enhance Ghanaian participation in petroleum exploration and production. Now, the small scale mining promotion so that normal Ghanaians, infant industries can be protected. Makes sense. Now there's community mining scheme introduced to support legal small-scale mining by Ghanaians, reducing galamsey. Okay, natural resource governance initiatives, licensing regime, all the things we said, right? State participation in strategic mining ventures, and even sometimes government of Ghana has a joint partnership, right? In all petroleum and mineral operation. Meboa, 10% carried interest, 15% carried interest. Makes sense. It's a way to check this.
Mm.
I hope when this thing comes, you will remember. That's why we are using local language. Clear. Clear.
Mm.
Good.
Yeah.
Hmm.
See. Question 4. Petroleum activities are said to include a series of interrelated activities. Required. Enumerate the main stages of petroleum operations, bringing out key distinguishing features and or activities involved in each stage of the operation. What are they really asking for?
In the same way again.
What are they asking for?
They are asking for the stages. That's from acquisition, exploration,
No,
product.
the upstream, midstream, downstream things.
Whichever way you go, you are correct. And then they said for each of the stages stated above, identify the principal equipment and machinery required for use. Oh, you are. This is what we'll get.
Equipment and machinery.
Yes, that they use under each stage.
So, exploration, remote sensing,
Is that
and
exploration?
machine. Remote sensing machine, and
Remote sensing machine. So these are some of them.
Geophones and hydrophones.
So upstream sector, we have seismic survey vessels, drilling rigs, that's onshore, offshore, blowout preventers, casing and tubing, wellhead equipment, production platforms. Now oil and gas is becoming very detailed though. Before all these things, here, we are just doing taxation. Now they are becoming important because if you are taxing oil and gas, these assets, you should know where they fall so that you know whether you are categorizing them under a pool or you are expensing them, right? That's why they become important. I hope that makes sense. So, Odie, take some 2 minutes and do it baba small or write some down or just take a shot. Because now you may go to a calculation question. Shadie, let's assume you went to a calculation question. And then you go and see catalytic converters inside. A B. Do you know it will spoil your whole mood? Oh no, be honest. When we calculation question when you Joe distribution of crude oil, near catalytic converters, hydrocrackers. What did distort your whole thing? Let's say what. But the thing is, remember, you're not there to get 100. As a student, when you go and you see something, and you don't know, cancel that thing and work the question without that thing. That's the rule. Do you understand?
Sir, please come again.
I say if you go and you see something which you do not understand, work the question without that thing. Makes sense? So assuming I didn't know what transport, maybe catalytic converters were, I'll cancel it assuming it doesn't exist in the question and work my way through the question. That's how we pass. Don't let Adia Bakubi in Bese way or high life. Somebody should not use this kwabna to come and spoil your daddy Lumba. So are we making sense? So anytime you see something, let's say you are doing petroleum computation, right? You don't know how to do production. You don't know how to do production bonus. You go and see production bonus, right? Don't think. Assume the production bonus does not exist and just work your normal question the normal way. Makes sense. But people will be thinking about how to treat the production bonus and they'll waste about 2 hours. So my way and that way, which one is more sensible? That production bonus now or pray honor. All you have to do is share. Just share in the proportion. But assuming it doesn't make sense to you, just leave it.
And this bonus, signature bonus, you add it to.
Yes, signature bonus, it is a licensing fee. So it's part of exploration. You add it to exploration. You go and you see interest on machines. It's borrowing cost, IAS 23. It must be added to development expenses. But if you don't know, you leave it. Then you work it without it. That's how we do these things. Okay. Exam may require strategy, tactics, technique. Anyway, I hope you are learning something. Yeah, Maxwell.
I want to see how they frame this particular.
You said?
Hello, sir. Yeah, please, I want to see if you can scroll up for me. Let me see how they frame this particular question. The one we just look at.
How they what?
How the question was framed.
Enumerate the main stages of the petroleum operations, bringing out the key distinguishing features and all activities involved in each stage. Then B, for each stage, identify the principal equipment and machinery required for use. This was also 20 marks. 10. Some of these questions, they haven't come yet. That's why you don't see any date there. Anyone that they bring from my question bank, I put a date into it. Shadia, let me show you. You see, anytime they bring the question, then I change. You can see. You can see.
Yes, sir.
So these are not past questions for me. They are books. They are questions that I have. So anytime they bring, then I now go and put what? The date it came on top. So these are ones that are yet to come. And you go and see it there on Thursday. So I'm really expecting this one. If this one comes, I'll change the title to this date. Okay, anyway, we go. Okay, this one, I think this was the one that we're looking at. Yeah. According to literature, local content is a policy framework mostly used by host countries to achieve specified objectives required. Clearly but concisely demonstrate your understanding of the term or concept local content. B, outline how Ghana is achieving this in respect of this natural resources exploration, development, and production. So you see, this question is purely on local content. Can you see? So what is local content? Let's read and understand it well, so that when you go and you see local content, wait me, I shall support Moonsu. Read and let's go. Before we go for our break, this is the last thing we do before we go for break and come back.
Okay. So local content in natural resources, resource management. Understanding the concepts of local content. Local content refers to a policy framework implemented by host countries to maximize the economic benefits of natural resource extraction for their citizens and local businesses.
Continue. Why do you think we do local content? To solve a particular problem. What was that problem? We learned it. That was the first. The resource.
Resource scarce.
The resource scarce. And what is the resource scarce? What is the resource scarce?
It's about the misuse of the resources,
but not benefiting from it.
Yeah, having abundance of resources but not getting proper benefits from them. Okay, good. So that was local content. So what are the key objectives of the local content regulations or policies? Yes?
It's what I'm reading you. It mandates the participation of local firms, workforce, and supply chains in the exploration and development and production of natural resources. The key objectives of local content policies include 1, enhancing domestic value addition, ensuring that a significant portion of the revenue generated from natural resource extraction stays within the country. Job creation and skill development, promoting employment and knowledge transfer to the local workforce. Encouraging indigenous business participation, facilitating the growth of domestic firms through partnership, subcontracting, and procurement opportunities, technology transfer, and capacity building, promoting the acquisition of skills, technology, and expertise among local industries, economic diversification, reducing dependency on foreign investment by developing competitive local enterprises in the extractive sector.
All right. So these objectives can also be the same as the advantages. Make sense? So that you don't take. So if you go and they ask you the benefits of local content, you can write something. You can write something.
Mm-hmm.
So let's look at the B and let's go for a break and come back.
How Ghana is achieving local content in natural resource exploration, development, and production. Ghana has implemented several policies and initiatives to enhance local participation in the extractive industry. This include local content regulation for petroleum mining, petroleum local content and participation. So petroleum regulation 2013 LI 2204. It requires oil and gas companies to partner with indigenous Ghanaian business, mandates a minimum percentage of local employment in petroleum operations, encourages technology transfer and capacity building for local firms. Minerals, technology. Minerals and mining. That's local content and local participation regulation 2020 2431. Reserve certain services such as catering, haulage, and security for Ghanaian firms. That is why ATS have left Gofields. Okay. Requires mining companies to source materials and equipment locally when available. Encourages the employment of Ghanaians at all skill levels in the mining sector.
I hope whatever we are reading makes sense that you can reproduce on the DD.
We'll look through again.
Only
Makes sense.
from one person.
Bill, it makes sense.
The same people throughout. So some of you've kept quiet. They are
Bill,
not
even for the
We are here.
petroleum local content regulations, I think in 2020 or something, 2022 or so,
yes.
they did on it.
All right. Then these are some of the other local content that Ghana has done, apart from the local content regulation. Let's look at them and let's go for a break and come.
Ghana National Petroleum Corporation, GNPC, and state participation. GNPC actively participates in oil exploration and production to ensure government involvement in the sector. The government has equity stakes in key extractive projects to maximize state revenue. Establishment of the Minerals Income Investment Fund. Okay. The MIF was created to manage Ghana's mineral royalties and ensure long-term investment in the country economy. So, Prof, if they ask you, what is MIF? What is MIF?
It's a fund that has been set up to manage mineral royalties that are received and ensure long-term investment in Ghana's economy.
So, is that mineral royalty or all petroleum? Okay, that is the mineral. Okay. So, petroleum also have a fund.
Yes,
that collects all the
investment funds. They are there. It's under the Petroleum Revenue Management Act. The Capitalization Wealth Funds, we have a way we invest them. Right. When we get there, we'll look at them.
Okay. So promotion of indigenous businesses in the extractive sector. Policies encourage joint ventures between foreign investors and Ghanaian-owned firms. The government supports local entrepreneurs through financial and technical assistance. Training and skill development programs. Collaborations between the government, universities, and extractive companies to train Ghanaians in technical fields related to mining and petroleum, scholarships and internship program for young professionals in oil and gas, engineering, geology, and mining technology, small-scale and community mining initiatives. The government has reserved small-scale mining for Ghanaians, promoting economic benefits for local communities. The introduction of the community mining scheme ensures regulated and sustainable small-scale mining.
I hope we have learned something. So when local content comes and they ask you various ways in which government is doing local content, you can do something.
Mhm.
Okay, that's good.
Hello, sir.
Yes, please.
Would the rule board fall within?
Hey, I can't hear you. Your voice is.
The good board,
Yes,
will it fall?
yes, it will fall within local content. Yes.
Mm.
It's a good addition. I like it. Introduction of the gold board. Good. I like that. So that local
So
firms.
the gold board, Prof, is it a good thing?
Yes, it is. To promote local content.
But now they're making the guys, the Ghanaians who sell the from gold dealers, they're really worrying them. How?
To organize their activities within the legal framework.
But
If they organize
they
their
are taking
activities well,
huge amounts of money from them for just licensing a whole lot.
It will
And
be
the procedures they've done the procedures that they should make it so clear. No? It's like you have to know someone a whole lot of way.
Ghana for you.
Ghana. Every good initiative you'll be ready to do. Anyway, let's continue.
Let's see.
Now, you see, when we started, I told you ownership of natural resources can come as a question.
Mm-hmm.
Shadia. This question. 8 marks. It can come for 5 anyway. Concisely explain the position of the 1992 Constitution of Ghana on the ownership of petroleum resources and minerals as stipulated under Article 2576. Just like this, like that, Keke.
Hey, but Prof, do we have to write the article? I mean, you can paraphrase.
You have to, otherwise you don't get the full mark.
Hey, Prof.
But Prof, the question says concisely explain.
So you state and explain.
Hey, state pa.
The whole way.
Yeah.
Hey.
Oh no, you can. You have to. It's keywords they are looking for. So at least a key.
Okay.
Key of the keywords.
Yes.
So read and let's see. What does Article 2576 say?
The ownership of petroleum resources and minerals in Ghana is explicitly outlined in Article 2576 of the 1992 Constitution of Ghana. This provision establishes that every mineral in its natural state in, under, or upon any land in Ghana, rivers, streams, watercourses throughout Ghana, the exclusive economic zone, and any area covered by the territorial sea or continental shelf is the property of the Republic of Ghana and shall be vested in the President on behalf of and in trust for the people of Ghana. Implications of Article 257.
Wait, how would you paraphrase? You paraphrasing you say by no near better.
Okay, so I will say that under the Article 1992 Constitution, it says that every mineral or every mineral resource
every mineral that
in Ghana
natural state that is
found in the natural state. Yes.
Found in a natural state in Ghana
or below the land, the rivers or streams or water courses in Ghana.
Prof, the trauma and
No, meka. Intino, that
Who the include your mind in Derby for paper units to name intro.
inside. Yeah. So I said, every
States, whether on land or under
brow,
in the water bodies of
it's
the country in its
natural.
exclusive economic zone.
Belongs to the people of Ghana.
That is
It has
under,
been entrusted.
Property of the Republic of
under
Ghana.
or above any. Oh, why is this thing? I won't pen the crowd bread. Above or under any what land in Ghana, river, streams, or water, not so, or water belongs to
Prof,
Ghana.
I would say whether onshore or offshore, so that to cover those streams, rivers and stuff.
Okay, send there, brofo. How you write your brofo? River, streams, or water bodies. Are you getting it? Is the property of the Republic, is the property of Ghana, not so, vested and shall be vested in the hands of the president, right? In the hands of the president on behalf of the people. That's all. On behalf and in trust for the people. Yay. And one. I hope this is not bad. So every mineral in its natural state that is under or above any land in Ghana, rivers, streams, or water bodies is the property of Ghana and is vested in the hands of the president in trust and on behalf of the people of Ghana. Simple. Now we have 6 marks. 6 marks. Okay, can we move?
Prof,
Yes, please.
will it be appropriate to also add 268, which mentions that then it is as a result of this that government would, Parliament will have to approve all mineral rights that are given to persons.
Yes. If you can go further, I mean that one there.
You get
And they will block your mukra.
you get an award.
Thank you.
But that is very good. All right. So what's the
Baby
This
was
was
down
Article
her
268.
implications.
we are going
257.
You know what the gentleman just said? He said we should add 268.
That's the parliament have to
Ratify the agreement.
yeah.
So what's the implication? Let me go break or time call.
Okay,
Well,
state
the
ownership
implication is that
and
the president
control.
cannot appropriate the resources for his own benefit.
Yeah. One, it also brings state ownership and control, presidential
Mhm.
trusteeship, regulation and licensing. Okay, that's where the 258 can come in. Also, revenue and
Mhm.
distribution, environmental and social responsibility. Okay, so these are the implications. Okay, so first break. It's like we've covered a lot of material, eh?
See, boss, every time, Ben.
9. Let's just come 10 o'clock. Okay, stretch and come back.
Hey, boss, the time is not timing like that.
We'll come back 10 o'clock.
10. Hey, Bayana Mafada.
Mamna.
Please, the fifth point.
The fifth point, environmental and social responsibility. As the ultimate goal of
Responsibility.
natural resources, the state is responsible for ensuring that extraction activities do not harm the environment and that local communities benefit from resource exploitation through policies like local content and corporate social responsibility. So the enya kakra nka ho, so that we go for 30 minutes break. And I'm wondering one thing, because literally,
Yes, I agree.
because you are going to the legal framework. This is it.
Mm.
Clearly but succinctly, hey, bro, discuss oil, gas, minerals, and other natural resources taxation, regulatory taxation, regulatory framework in Ghana. They are same friend. It's actually supposed to be regulatory framework. So we have to talk about all these laws and then let's go. Regulatory framework. This is where we'll do some calculations. So you will not sleep. Because here we'll do this where the fiscal regime, we'll look at the fiscal regime, we'll do distribution of crude oil, we'll do mineral royalties, I'll teach you mining calculation.
Okay.
And, if we come back a little bit of theory kakra, calculation kakra, and tomorrow to
All right.
that theory kakra, calculation kakra. I don't want it to be pure theory so that people will be sleeping. But I hope it makes sense.
Yeah.
So how was session 1?